A nice little bounce here, and all the right sectors are bouncing. Your global cyclicals moving on the upside. Just take a look here. We've got sectors, semiconductors, energy doing a little bit better overall. Bank stocks up a little bit here. Materials up. And finally, a little bit of a downside on utilities. Have something to say about that in a minute here. The two big market themes right now. There's a lot of hope out there that somehow there might be some kind of second truce on China evolving. We'll see about that. They've got more stability now, but what's the probability of a recession? And whether you think the stock market is going to be stable depends on what you think about a recession probability. So everybody's out with their recession probabilities. J.P. Morgan had a note, some of the analysts over there, saying the probability of recession was less than 50% right now. If you put that up, you can see that. And there are other people who think the probability is higher than 50% on a recession. But there's J.P. Morgan here. Downturn in the coming months still below 50%. So a lot of debate on what that's exactly going to mean. Industrials today are the big topic of discussion. I agree with Jim's point. Goldman's downgraded Caterpillar a little late, thanks, down 12% in this quarter. But nonetheless, they've got a point here. Caterpillar's up, Deere, Emerson, Cummins, 3M, all up. But don't kid yourself. These stocks are all down 7, 8, 9%. Just this month, the last 5 or 6 trading days. So something is going on here. We saw some freight numbers a little bit weaker than expected recently. We've had some issues just debating. Barclays was talking about an industrial recession in the companies that they cover overall here. So you can see there is something going on here. And the numbers for the second half of the year in industrials have been coming down rather dramatically. So yes, it's a late call, but you get the point. They're finally catching up. Here's something that bothers me a little bit here. Everybody's talking about, oh, the defensive names are doing really well. So everybody loves utilities and and consumer staples. They're all doing better so far. And generally, these big cyclical names that are out there, your energy, your industrials, and technology stocks, they're all underperforming. That's great. It's nice to hear it. I like utilities. The problem I have is they don't move the dial much. So, yes, it's nice that they're doing well this year, but they're pricey. They're up 15% year to date, about in line with the S&P 500. The multiple's high, 18 times forward earnings, almost 19 times. The historical multiple is about 15. And the bottom line here is they're just rather expensive right now. The final thing I just have objection for utilities is they're 3% of the S&P 500. Technology is 21%. The top 4 are 60% of the S&P 500. Utilities and REITs just don't move the dial that much. And even though I think it's terrific, you better worry a lot more about how the industrials and how technology and about how bank stocks are doing if you really want to move the market.